Good morning, ladies and gentlemen. Thank you very much for turning up for this event, today, August 24th. I want to especially welcome all our panelists. Keynote speaker, Mrs. Uwais, thank you very much for answering our call. Professor Yinka, thank you so much. Thank all panelists for answering our call to be part of this event. As we are all aware, the Nigerian Economic Summit Group 28th Summit is coming up October 24th to 25th this year. This event is one of the pre-summit events. And this event is put together by the Financial Inclusion Thematic Group. This is one of the thematic groups within the NESG that is focused, this particular one is focused on enhancing financial inclusion in Nigeria. The group has been working for at least 5 years now, and the group is made up of professional stakeholders from different sectors, in those sectors that have to do with financial inclusion. Individuals who are so passionate about growing financial inclusion in Nigeria. So we have individuals from the academia, like Professor Yinka. We have individuals from the banks. We have Surname. We have from the central bank. We have across different sectors. You'll be hearing some of them speak as we go on through in this program. So today's program is a panel session that will be anchored by Professor Yinka. I'll be handing over to her shortly after this, my short speech. So my assignment is just to welcome us all and to thank us for answering our call, for turning up for this event. We all know.
Oh dear, your voice is gone.
Financial inclusion is to the national economic growth, how important it is to the web lenses for the next couple of years. Thank you very much for coming once again. Thanks. So I'll leave the room now for the representative of the NESG CEO.
Good morning, everyone. I'm sorry, can you all hear me?
Yes, I can hear you.
Yes, for sure.
Okay, so good morning, everyone, and thank you for coming. This is the opening remarks by Mr. Laoye Jayola, the Chief Executive Officer of the Nigerian Economic Summit Group, at the 28th National Nigerian Economic Summit pre-summit event themed Financial Inclusion for All by year 2020. What worked? What didn't? Which way forward? And my name is Ogi Chibera. I am the Head of Corporate Services at the NESG. And I'm here to take the CEO's remarks. Heads of ministries, departments and agencies, captains of industries, heads of associations, communities, ladies and gentlemen, on behalf of the board and the management of the Nigerian Economic Summit Group, NESG, I am delighted to welcome our distinguished panelists and our highly esteemed participants to this August event titled Financial Inclusion for All by year 2020. What worked? What way forward? Hosted by the Financial Inclusion Thematic Group of the NESG. This is one of the pre-summit events for the 28th Nigerian Economic Summit, NEST 28, which is jointly organized by the NESG at the Federal Ministry of Finance, Budget and National Planning. Next 28 is geared towards engaging stakeholders in a series of virtual conversations and sessions in the weeks leading up to the 28th Nigerian Economic Summit, which is scheduled to hold from October 24th to the 25th, 2022. If you have not registered, please kindly go to nextgroup.org/28 to pre-register for the summit now. We look forward to welcoming you to the event. The Central Bank of Nigeria introduced the Financial Inclusion Strategy in 2012 to achieve 80% financial inclusion by 2020. And various stakeholders have since introduced many initiatives towards meeting this target. Financial inclusion often acts as a proxy for a nation's economic progress. And according to the Global FinDex report, between 2011 and 2021, financial inclusion in Nigeria grew from 26.67% to 45.32%, a 65% increase. And although the 80% target was not met by the end of the year 2020, the progress is considerable, especially in light of the macroeconomic headwinds that the country had faced within the said period. Amidst these headwinds, the hardest hit group has been the lower income segment of the citizenry, being more vulnerable to economic shocks and income volatility. And this has increased unemployment and widened the poverty gap. As of today, 4 in 10 Nigerians live below the poverty line. So as the industry looks forward to another 10 years, it is necessary to appraise the major initiatives which contributed to this progress and deliberate on major bottlenecks and lessons learned over the period, with a view to setting a new financial inclusion agenda for the year 2030. Therefore, this pre-summit event will engage relevant stakeholders to appraise the present level of financial inclusion, discuss financial inclusion bottlenecks, and the building blocks for Nigeria's financial inclusion agenda 2030. Once again, I extend the board and the management's profound appreciation to every participant here for accepting our invitation to share our knowledge, experience, and insights on financial inclusion at this event, all in the national interest. And finally, I urge you once again to register for the 28th Nigerian Economic Summit through the website nesgroup.org/28 to join other experts and stakeholders to articulate an agenda for Nigeria with clear priorities for shared prosperity in 2023 and beyond. May God bless the Federal Republic of Nigeria, and thank you very much for coming. Thank you.
So I think it's over to our keynote speaker now, madam. You can speak now, Ms. Waste.
Okay. I was waiting to be prompted. Good morning, everyone.
Oh, sorry. Yeah.
Good morning, everyone. It's an absolute pleasure for me and honor to address the gathering of great minds that are here at this very important event. I want to commend the NESG, being the organizers of the event, and all other stakeholders who are actively participating at this summit for the painstaking efforts of this particular pre-summit meeting designed to chart the way forward to effect financial inclusive policies, which we hope would address challenges and consolidate on the gains achieved so far. As we gather here today on the progress we're making as a country in the financial inclusion space, with a major focus on the way forward, it is imperative to note that we can only get it right when more partners are involved in the process for massive financial inclusion of poor rural dwellers, where there is a dearth of infrastructure, insecure places, and underserved communities, and with specific attention on the female gender. This is the nut we need to crack, because if we do, we would be making impact where the needs are highest. According to the World Bank, financial inclusion means individuals and businesses having access to basic financial services and products, such as bank accounts, loans, pensions, and insurance, in a manner that is sustainable and affordable. Financial inclusion has been identified as a critical engine of economic growth across the world. Where there is little or no access, but recourse is made to cash-based transactions through informal means, which could be exploitative, costly, and a barrier to their being brought into the formal economy. After the Maya Declaration in 2011 at the Global Policy Forum in Mexico, the Nigerian government launched the National Financial Inclusion Strategy in 2012, with the goal of reducing the financially excluded to 20% by 2020. The strategy was to reflect on a long-term commitment and plan more strategically towards expanding financial services access and use to underserved populations. With this commitment, the years following have witnessed government and monetary authorities introducing various policies aimed at deepening financial inclusion. The policies have ranged from various institutional engagements, such as the establishment of community and microfinance banks, deliberate partnerships with the private sector, the licensing of providers, to specific policies and programs, all designed to facilitate access. Financial exclusion often results in poverty and further deepens inequality. The consequences of having large numbers of Nigerian citizens without access to basic financial products and services certainly exposes them to even more precarious economic conditions, and of course, to poor human capital indices. As Africa's largest economy, Nigeria has the potential to drive consumers towards financial inclusion, yet economic instability, amongst other factors, has made progress uncertain. In a 2020 report by Enhancing Financial Innovation and Access, Athena, 64% of Nigerian adults are were financially included by the end of 2020. This means that 36% of Nigerian adults, or 38 million adults, remain completely excluded. About 6 in 10 Nigerians live below the poverty line, with research showing that being poor, rural, and less educated are all barriers to inclusion. Fortunately, the banking sector has led the way to financial inclusion, with nearly 3 in 10 adults, 29%, having bank accounts over the recent past. 3 in 100 adults have mobile money accounts, and the same number have non-bank financial accounts. The global index measures, however, indicate that 45% of Nigerians were holders of accounts by 2021, an 11% rise from 2011. With the economic adversities that have bedeviled Nigeria since then, and indeed the international market, particularly related to the COVID-19 pandemic, the slump in oil prices, and the unimpeded population growth, largely in the poorer segments of our society, unemployment and poverty can only have exacerbated by now. Indeed, with the Nigerian adult population of 18 years and above estimated at 106 million, the following are the numbers that I was able to get. About 2/3, so 700 million, live in rural areas. About 55% are 35 years and younger. About 20 million adults, 19%, have no formal education. 4.9 is the 4.9 people average household size, and 1.6 average income earners per household. One of the major challenges in the financial inclusion process is ensuring that the poor rural dwellers and underserved communities are brought into the formal sector, especially considering the lack of financial sophistication amongst this segment of Nigerian society. An estimated 40 million financially excluded Nigerians lack knowledge of the services, or lack enough knowledge of the services and benefits derivable for access. Another challenge is that the financial service providers in Nigeria are largely focused on urban and generally easy to reach semi-urban areas, resulting in limited access for those who reside in rural and, in a few cases, the harder to reach semi-urban areas. This trend is common with those clusters in rural households who have no access to electricity, as financial exclusion is also correlated with poor access to modern energy services. In a 2019 survey carried out by Athena, financial exclusion for women stood at 36% compared to 24% for men. This is in contrast to less populous countries in the continent such as Uganda, Tanzania, South Africa, Kenya, who have done well to bridge the gender gap in relation to financial inclusion. In our country, most women largely depend on informal financial services. Worse still are the statistics in insurance products and services, the survey showing that only 1% of women are insured, despite the endemic gender-related risks and their exposure to uncertainty and unexpected expenses. Other gender barriers affecting women in accessing financial products and services include distance to financial access points, especially those in rural communities with lower literacy levels, and particularly in the northern region. The youth make up a significant portion of the Nigerian population, yet the evidence demonstrates that a large number of them are not quite financially included. There has been a significant surge in the use of financial services in Nigeria by youth, largely driven by growth in the banking sector, with 45% of Nigerians banked in 2020, up from 40%. Realities are that financial exclusion of youth is also correlated with other socio-economic issues such as youth employment or youth unemployment and underemployment. The government approach, the federal government of Nigeria, since the launch of the strategy, has implemented several policies aimed at deepening financial inclusion. By the end of the year 2020, only 64% of the 80% had been achieved. Some of the militating factors responsible for this include the economic downturn, growing insecurity, poor literacy rates in the areas where there's been no reach, low trust in financial service providers, and the COVID-19 pandemic. In a deliberate step to curtail these factors, several policy responses from the CBN in the last 5 years are indicative of the full commitment on the part of government to deepen inclusion. Interventions such as the Shared Agency Network Expansion Facility, SANEF, and the licensing of payment service banks such as Smart Cash and Momo are policy instruments designed to reach the unserved and the underserved towards incentivizing last mile access. These policies have impacted positively on the social investment programs as beneficiaries who are largely in remote communities have been identified, trained, and incentivized to support small and micro businesses. In the majority of cases, beneficiaries are being exposed to banking services for the very first time when a virtual or microfinance bank is opened in their names. Worthy of mention here is the development of the National Social Register by the National Social Safety Net Coordinating Office, which comprises state social registers and information collated through a stringent and transparent process supported by the World Bank at community level by the state ministries of planning and cleaned up at the federal level. As at 31st May, the social register, the National Social Register, had data derived from all the states in Nigeria and the FCT. It had covered 752 local government areas, over 8,000 electoral wards, over 103 communities, 11,612,275 households, and over 48 million individuals. It is still growing. It is the largest social register in the world already. The information collated can be desegregated into those with a valid means of identification, those with bank accounts, says 22%, their age, largest being 16 to 35 years at 33%, and the smallest being above 65, being 3.9%, gender, females being 51%, and the rest male, head of households, disability status, the vocation of heads of households, it could be in agriculture, otherwise self-employed or unemployed, and school enrollment, as well as their levels of education. A community profile has also been developed as the enumerators work to collate the data with very meaningful information ranging from communities with or who have access to banks due to proximity, communities with GSM services, along with which networks they cover, road distribution networks, whether they're bush paths, tarred roads, graded roads, waterways, existing health and educational institutions bring primary healthcare, primary schools and secondary schools, availability of facilities such as supermarkets, police stations, fuel stations, post offices, and skill acquisition centers. This is very useful and very meaningful information for financial service providers who want to actually engage in these rural communities. This information will come in very handy for fintechs, for social entrepreneurs, for banks and financial institutions, PSBs, as well as all partners who are keen on addressing the challenges that the poor and the vulnerable confront when attempting to engage with the formal economy. The information at NASCO provides insights as to where the needs are hugest. spaces where Nigeria continues to struggle in terms of financial inclusion. You see, if your monthly income falls below 100 naira, the contending demands on that amount will simply push the need for a phone number down the line. Indeed, or less value comes with the phone, along, of course, with the knowledge of how this value can be accessed. These Nigerians are simply excluded. The CBN policy that phone numbers are required for the opening of virtual accounts needs to be reviewed if we intend that these citizens be empowered. Fortunately, with efforts by NASCO and the Cash Transfer Office for cash transfers to poor and vulnerable Nigerians, their unique identities have been created by NASCO, and given their collaboration with NIMSI, they are able to create NIN numbers and give these people an identity. You see, these citizens have remained invisible, not having been ever registered or documented on the Nigerian landscape. We must find a way of supporting them to engage with what we often take for granted. Digital financial services, such as mobile money, represent a faster route to drive financial inclusion, since it provides access and convenience. Most often, the requirements to open bank accounts, such as an ID card and proof of residence, may be burdensome for those in rural communities as compared with those who own mobile phones and SIM cards, since they can access financial products and services with phone numbers. The good news is that a good number of Nigerians are connected to mobile phones, even in remote communities. It is estimated by GSMA Intelligence that there are roughly 170 million SIM connections based on subscriptions in Nigeria as at January 2022. However, only 10 to 20% of them use smartphones, while the rest rely on more traditional mobile phones, limiting their options to voice calls and text messages, and that is only if they're literate. This number can be leveraged upon for optimal financial inclusion services. We must remember that based on the statistics of 230 to 250 Nigerians, the other Nigerians do not own SIM cards or mobile phones. These citizens should be the target of our efforts, as they have been excluded even by policy from engaging in financial transactions. Many of them reside in areas where the infrastructure is not quite available, or due to poverty, do not own and do not prioritize retaining a number through usage, because of course there's a cost to keeping a number due to the contending demands on their meager income. It is actually a catch-22 situation, as the phones are only meaningful if value comes through owning one. So which comes first, the value or the phone? There are several hurdles to cost, the first one being trust. We have continued to pat ourselves on the back for impact on the urban and semi-urban areas, spaces that are much easier to navigate given the existing infrastructure and better understanding of the benefits that accrue from engaging with the formal economy. Areas that are hard to reach in terms of insecurity, lack of infrastructure, and know-how are left unserved. Indeed, with the population growth by far larger in the poorer segments of our society that continues to exceed economic growth, there's an increasing backlog amongst this category of citizens that we definitely need to catch up on. For one, we must intentionally engage in financial literacy, as many in those areas do not understand the benefits of opening and retaining an account beyond the first payment. How they can receive or send money in a timely, regular, and private manner without the next person, maybe the husband or the child, knowing that money, the alert has arrived. They must be empowered with the wherewithal to support their businesses through loans that have interest rates that are not exploitative, no matter how small the business. If the interest element is anathema, we should summon the knowledge that facilitates the growth of their businesses, bearing in mind their preferences. And there are many avenues to do this. The benefits of microinsurance and micropensions, which are available now, should be broken down to them in a basic and very simple manner. We must be patient with them, even if in the beginning the tendency is to withdraw all the money in their virtual accounts. This is very common all over the world. You know, when poor people are engaging with the formal economy and opening accounts, the first thing they do is take out everything. And there's a cost to the bank or to the provider, the financial provider, to open again once the account is cleared. But they need to build trust and know that when they go out to the market or wherever it is they want to and they convert that virtual money into tangible money, that agent is there to do it for them. If the agent is not there, then you're back to, putting them, hiding the money in underwear or under the mattress. It takes time to trust the system, especially if the agents to transform the virtual into material are not consistent in their vicinities. The licensing of PSBs this year has only boosted the capacity for reach through telecom providers. Slowly but surely, we are chipping away at the excuses that have prohibited and prevented supporting this category of Nigerians who live in these areas. Compared to ours, their needs are not high. The costs of facilitating financial inclusion for this category of citizens are minimal when compared with the outcomes, if done properly. We have a responsibility to do this for many reasons. The numbers are huge, so huge that it's bound to be profitable in the long run. Besides, these Nigerians are entitled as citizens of Nigeria to support. Engaging the sheer numbers is bound to grow our economy and provide the much needed stability and security in the areas that are underserved. Moreover, engaging their mental faculties and growing their businesses presents us with a win-win situation. They must be supported to take ownership of their lives, thereby building their stake in the community. It is time. It is time we develop and offer diverse products to suit different sections of our society. It is time to support the active application of technology in this space, especially backed by financial literacy. Scale and objectivity are possible through fintechs, social entrepreneurs, and PSBs. They only need to be more innovative about how to support those in need. It is time we throw the challenge to apply ourselves in spaces that are yet to be engaged, not the relatively easier spaces to navigate. Where they are able to reach the financial excluded, we would have covered the entire country. CBN must continue to create policies that incentivize, encourage, and integrate these marginalized numbers on the financial landscape. Which initiatives must include the regulation of efforts that achieve and surpass these targets. SANEF and the banks must continue to ensure the availability of agents in these hard-to-reach areas while ensuring incentives, consistency, and regulation based on ethics and the integrity of transactions. It is time to provide boots on the ground and community support avenues, and especially grievance report mechanisms that are easy and basic to utilize for engaging this category of Nigerians of financial literacy transactions. My experience is the further it is, the more exploitative it can be. And this is what actually scares a lot of our poor from putting their money in banks. The rates can be high. And so securing their confidence is a prerequisite for the target audience. This can be achieved through agents that are familiar within the community, and if they're trained properly, even to do the financial literacy, it will present us with a win-win situation. It is time for them, it is time for us, and it is time for Nigeria. Thank you for listening.
Thank you very much, Mrs. Uwais. I think I'll just take over. Nee, is that okay?
Yes, oh yes.
Great. Good morning, everybody, and thank you all for joining us. And I think, Mrs. Uwais, thank you for that splendid introduction and run through, but not only the introduction and run through, but also the call to action on what we need to be doing as a citizenry and as a community and as key stakeholders in the ecosystem. So this morning, I want us to have a conversation, and the topic really is on financial inclusion for all by 2020. What worked, what didn't work, and which way forward. And Mrs. Uwais and Ogechi in their opening remarks have sort of given us the lay of the land. But when we think about financial inclusion generally, we usually think about three core sectors. We think about the regulatory sector and the enabling environment. We think about the providers or the supply side, which is really how do we enhance product and service innovation. And then we also think about the consumers in terms of who is going to use it. And the three segments of the consumers are typically the government, the businesses, as well as the individuals. And across all these sectors, we see that there are different changes and different things that need to be done. And that's the conversation we're having today. So in our midst this morning, we have Mrs. Uwais representing the government, and she'll speak really and provide more details on some of the numbers she spoke about regarding the social investment programs. We also have a development partner in the name of Isaiah Owolabi joining us from EFINA, who have been very active in taking financial inclusion measures since 2008. And then we also have Dr. Paul Oluikwe, who is one of our regulators from the Financial Inclusion Delivery Unit at the Central Bank of Nigeria. And he'll be sharing the initiatives around what is going on the policy side, what have we done, what has worked, and what do we look forward to. And then we also have Mrs. Ronke Kuye, and Mrs. Ronke Kuye represents SANEF. And at SANEF, what they've been doing is really expanding that distribution base to ensure that we can have agents across Nigeria to serve. And she'll tell you the challenges and the target that she had, or the challenge that was given to her to start up this business and roll it out in a very short space of time. And last but not the least, we also have a private sector provider in the form of Mr. Shola Bikester. And Shola is focusing on what we call financial inclusion centers towards propagating and building agents and around the country as well. So we find out that because not everybody, as Mrs. Uwais said, the trust levels are not there, the digital literacy levels are not there. So we still need these intermediaries who can support and help the people we're trying to reach to actually come on board and share in this service and this system. So without much ado, can we all have our cameras on? I'm not sure, I can't see everybody. Are our cameras all on so the audience can see who we are? Great, thank you all very much. So without much ado, we will start with Dr. Oluikwe. And Dr. Oluikwe, I think that we've come a long way since 2011 and 2012 when we signed the Maya Declaration and introduced the first financial inclusion strategy. But between then and now, there have been initiatives and interventions introduced by the CBN that furthered the industry's transformation. Can you briefly share some of the major CBN policies and innovations that have made an impact on financial inclusion in the last 10 years? And also, because I know that there is in the works a new financial inclusion strategy coming along, can you also give us some insights into what we expect to see in the next 10 years? Thank you. Dr. Oluikwe?
Thank you very much, Prof. Can you hear me?
Yes, we can hear you.
Hello, can you hear me?
Yes.
Yes, we can hear you.
Okay. All right. Thank you, everyone. Thank you, Mr. Niyajao, the head of the NESG, and also, I would like to extend my gratitude to Ms. Mariam Uwais for such a very great, outlay of where we are currently and in that keynote address. And she touched on a whole lot relating to our country and developmental aspects. I basically want to take on, I basically want to, give us a very brief snapshot of where we are and the policy and regulatory aspects of financial inclusion in the country and what we have been doing so far. And let's call our minds back to 2010 when we went to Maya, Mexico, and we made a commitment, Nigeria made a commitment to accelerate financial inclusion and achieve an 80% financial inclusion rate by the year 2020. And that task led us to implementing a national financial inclusion strategy. We formulated a national financial inclusion strategy in the year 2012, which is one of the policy, actions that we have taken. And that strategy was holistic in terms of driving the entire country, to work towards reducing exclusion, financial exclusion in the country, And then also in 2012, we implemented and formulated and began implementation of the National Financial Literacy Framework. And it was in the same year, 2012, that we had the cashless policy. All of these were aimed at materially expanding access to finance, easing access to finance, especially for excluded people. And when we say excluded people, we mean people who are most vulnerable in this, and women form a very large portion of this. And in our recent metric, we still see that the gender gap in terms of financial inclusion in Nigeria is widening. It is not been closing down so much as fast as other countries. And currently, as at the end of 2020, we are standing at 64.1% financial inclusion rate, which falls short of the 80% that we allocated or targeted for ourselves by the end of 2020. And so that is still a little bit far-fetched from our aspirations, and we want to materially, really drive that up. But we are ramping up policies, and we do know, let me also articulate some other policies that we have had. In 2013, we brought out the tiered KYC requirements. And what that means is that, because of the stringent conditionalities for KYC that banks require, for every individual to have an account, it was difficult for people at the very lowest rung of the ladder to be able to, have accounts. Even some people do not have birth certificates. We know a lot of people were born at home, in the olden days. And I can't recall my father having a birth certificate, and he doesn't even know his date of birth, but could speculate as to which dates, he was born because of the time periods and the happenings during them. So that's the same for a whole lot of people in Nigeria, especially in the rural areas, who cannot have any credible ID to be able to onboard to the financial system. So that's what the tiered KYC was meant to unfreeze some of those constraints that continue to keep these people outside the financial services framework and make them unqualified, not qualified. Especially even the people who run small SMEs, small and medium enterprises, may not be able to obtain a loan because they do not meet KYC requirements. They do not have a credit history. They don't have anywhere without to be able to turn to, except they go to loan sharks who will charge extraordinary rates, and exploitative rates to be able to give them money. So we also revised the guideline to bank charges, and the guidelines to bank charges was really targeted at protecting people at the very, vulnerable segments of our society so that they are not, disproportionately overcharged, and then also guidelines for regulation of agent banking, which has led to Surname, and Surname has really materially expanded, the agent services across the country. And the chief executive is here today, Ms. Ronke Kuye, and Surname has really done a whole lot to try and provide proximity to access points in the country. And that has been helping so much. And it grew from the guidelines for the regulation of agent banking and agent banking relations in Nigeria. And also we put up micro insurance guidelines in working together with the Nigerian Insurance Commission. There were TACAFO guidelines also, and then the BVN, the bank verification number, which has cleaned up the banking system and enabled, protection, safety, and soundness of the financial system, that individuals could be verified and that, people could not just walk from bank to bank to take loans. And that has really helped sanitize the banking system. And then, so there is really a rush of other regulations and other policies, and time will fail me because I know I have 5 minutes to do this, but there is a whole lot that's going on. And part of it is even the National Financial Inclusion Steering Committee, which is a governance and implementation body with the technical committee as well, who are aimed at really overseeing what's going on in terms of facilitation and coordination of financial inclusion activities in our landscape. And we even have implemented FISCO, Financial Inclusion State Steering Committees, across the 36 states of Nigeria. And FISCO is aimed at really getting to the grassroots to adopt all national programs and policies and decongest them to the grassroots and tailor them to their specific domains so that they are implementable, they are adapted to their context, and they could drive inclusion even at the very local levels. Challenges remain despite all the efforts that we have been making, just to wrap up. And I'm going to say that we need all hands on deck. regardless of all the policies and regulations we've been putting out and we've been using to try and make financial inclusion more viral in the country, there are still headwinds of infrastructure. Mobile infrastructure in a lot of the villages, in a lot of the rural areas is still at very infantile stage, not really robust, cannot carry, the kind of data and traffic that are required to be able to reach out to those remote areas. And so that solo ID is a sticking point too. Like I've mentioned earlier on, ID is really elusive for a lot of Nigerians. And only about 70% of our youth have ID for any credible transactional, onboarding to the financial system. And a lot of people in the Northeast and Northwest. Northwest is excluded by almost about 69%, and Northeast about 59%. And women, compared to men, are disproportionately excluded. So looking at these numbers, we really need to begin to think about how policy and regulation will be able to really, enable the financial system to try and adopt more people. So basically that's what we have done so far. And we have just recently formulated the National Financial Inclusion Strategy Review leading us to 2024 from 2021 with an ambitious target of 95%, and which can only be realized if we have a leapfrogging effect, and then we are really emphasizing digital to give us that vehicle, that leapfrogging vehicle, to be able to expand access to our people. Thank you very much.
Thank you very much, Dr. Likwe. And Dr. Likwe alluded to the fact that while we focus on financial inclusion and payments, there's also other financial services that are within the subsector. So we talk about credit, access to savings, payments, insurance, and pensions. And then also the fact is that, Lagos is not a good reflection of Nigeria. It's something I tell people all the time, because Mrs. Uwais has alluded to it, Dr. Likwe has also said it, that we need to take our minds away from Lagos and really understand what goes on. So the fiscals operating across 36 states is a phenomenal challenge, and to synchronize and harmonize all that. So Mrs. Uwais, I'm coming back to you now, just to give us some insights around government's effort to address the prevalent scale of poverty in Nigeria. And I know that you worked on the social investment programs, among which the conditional cash transfer was one of them. So can you share some of the impacts these programs had on the target populations, and also how exclusion affected the success of these programs? Thank you.
Thank you. I supervised the social investment programs between 2015 and 2019. And one of the major efforts was to build a social register that actually identifies those poor and vulnerable households who are underserved. They actually don't have even enough money to begin to think about saving unless they understand the benefits. The effort then was to go to the communities. The communities actually identify the people that are poor based on their own understanding of poverty, because poverty in one community can differ from the next community or another part of the country. And it was a very stringent process. Enumerators actually went round after the community has signed off, and they took down all the information that was required. And beyond that, I alluded to the community profile. Every community that they went into, the enumerators put down the information on access to banks and proximity to financial services. They found supermarkets, police stations, places where you can actually have POS machines, you can get financial agents. You also had information on the routes, the access, roads, waterways. All of that is being built in a community profile across, as I said, so many communities now, 752 local governments have been covered. And this information is available at NASGO, can be engaged with and shared with the fintechs and the providers that want to or are keen on addressing these excluded majority. Now, beyond that, for the cash transfers, there was a deliberate effort to train people in the local government, staff of the local governments, to go around and hold the hands of those who were being paid these cash transfers. That is when we were there. You know, I'm not too sure what's going on now, but I know that register the integrity has not been compromised. These people were advising, they were holding the hands, they visit every week, these people that were getting 10,000 naira, which may sound paltry to many people in the urban areas, but it was amazing what they were able to achieve. They would advise them to save a third, invest a third, and then use a third for their contending demands. You know, so if a woman says, oh, my daughter is getting married, or the roof is leaking, she's not going to use the entire 10,000. She's only allowed to use a third. And this was not done like, you know, compelling her. It was like explaining to her why this was necessary. And we have women who put money together in a community because they didn't have access to healthcare, primary healthcare hospitals or primary healthcare centers, who actually put money together and bought themselves a vehicle. Because otherwise, when women get pregnant in that community, I mean, when they're going to have babies, they're taken on wheelbarrows to the street, to the nearest road, and then cars are flagged down to see if they would be ready to carry them. And as you can imagine, a lot of babies were lost, even lives of the maternal mortality numbers were highest. In another community, we had women who put together money to rebuild the classrooms where the children go to, because they said they were leaking everywhere. You know, I do believe people who are poor are very resilient, they're very focused, but the problem is, you know, understanding how you can benefit from saving, from trusting the system, from knowing that, you know, there's consistency. We ran like, of course, in the beginning, we were paying in cash because in many of those hard to reach areas, there was no infrastructure. So we got through this very tedious public procurement process that the World Bank supervised, and we had certain, you know, payment service providers that would go to the communities to effect these payments. And because of transparency, we would say, this is the day we're coming, and then they would come and line up. But it was now evident to the rest of the community that these women were now paid 10,000 naira in the community on that day, you know. And so we had all kinds of reports coming back because we had a lot of monitors saying, look, the community would say, oh, we selected you, so you have to pay a levy, or the youth would go, or the husband would go and take money, and you'd see a lot of beer drinking on that day, you know. And the things, it was evident that we needed this financial, the timely, the regular, and the anonymous, I should say, where people don't know that you're being paid. You know, so we ran a test, and we found that in places like Jigawa, there were long distances between where there was access, where agents existed. And in other places, you know, the payment service providers were very happy to make payments, I mean, to open accounts for them, even if the majority of them cleared the account on that day. They were ready to bear the costs because the security challenges of going to those spaces to make the payments were really high for them. So it's actually getting to know the terrain, getting to understand, you know, the mindset of the people, and trying to persuade them, working with the local government staff that we paid actually only logistics to go and meet these people because they already had salaries from the local governments. We had their names and their numbers on the website. And so you could find them, and they would lead you to the people who were being paid these stipends. And the amount of businesses, it was unconditional, those cash transfers. But in every case that I came across, and I went through so many, you know, stories, every part of the country where children didn't go to school, even though it was not a condition, the mothers made sure their children went back to school once they started receiving their money. And they started investing their money in businesses, projects that they felt would benefit them, water, for their community, because they don't have to walk long distances. I could go on and on. There are so many benefits from financial inclusion. And I must say, the micro insurance and the micro pensions should also be included in the package that a lot of our financial service providers are offering to these people in these areas. It's critical so that there's one package when you go to do the literacy, when you have your agents and you train them properly to go and engage these people, that they're being offering the optimal. Thank you.
Okay. Thank you, Mrs. Owais. We'll come back to you. So the audience, if you have questions, please put them in the Q&A panel so we can the panelists can address those. But I think one thing Mrs. Owais has emphasized again is the power in enabling and empowering women. The women did not just look after themselves, but they actually did things that served the entire community. And that's the kind of multiplier effect that we can see when people have access to financial services. And I think the issue about, for us, we sing the Adekule Gold song, I don't get alerts. But this one, you couldn't hide your alerts on your phone by yourself, right? And your alert was visible to everybody. So how do we ensure that they're able to get this money and really do what they need to do? But the most impactful is having the boots on the ground to help them understand the behavioral changes that need to happen in how we address money, how we treat money, a third for saving, a third for investment, and a third for meeting our day-to-day needs. So those are some of the things that we'll come back and talk to. So we're coming to Ms. Kuye now. We're going to talk about this issue around agents, because one of the challenges Mrs. Owais also has brought us, and Dr. Olukwe said, is this issue of proximity. And then there's pecuniary and non-pecuniary costs in terms of getting to access an agent. So Ms. Kuye, I think I'll start with you, but just by telling us in terms of, alongside what you have done for financial inclusion through agent banking, what are the major barriers agents are facing as they move further into the rural locations, and how have they tackled this problem so far? Thank you.
Good morning all. Thank you, Inka. I think I'll focus more on what SADF has been able to do in the short space of time. And I think Mrs. Owais has done a good job of giving us a background on a lot of things that we need to do. So I'll just focus a bit more on some of the things we've been able to do so far. So in terms of, we had like 7 objectives when we started. And in terms of agent expansion, we were told to bring on, 500,000 agents by December 2020. And when I say we, I'm talking in terms of us, the super agents, the MMOs, the banks, and the agents as well. We are an enabling company. We don't deal directly with the agents as such. So we work with our partners to achieve some of these things that we have achieved so far. So we moved from 83,000 agents at the end of 2018 to, we achieved 561,000, by the end of 2020. But today we have about 1.3 million agents, financial access points out there, which is the most important thing, to start with. If you're doing financial inclusion, where do people go to? Do we have enough branches, bank branches? So we were able to achieve that. And then I do know that the NFIS target was to have a ratio of at least 476 agents to 100,000 adult population. So today, 34 states out of the 36 all have minimum of 476 agents to 100,000 adult population. As a matter of fact, some of them have 5,000, 3,000, and they're not Lagos. They are outside Lagos as well. So we moved pretty much from 62 agents per 100,000 adult population in 2018 to minimum of 476 today. In terms of the agent spread as well, it wasn't enough to just have agent locations. We had to have them all across the 6 geopolitical zones. I would say that pretty much most of the 5 of the 6 geopolitical zones are within like 80% of achievement. Northeast is just the place where we don't have a lot of success. And we all know that that's because of security challenges there. So in terms of transactions at the agent locations, of course, we all know that the highest is the cash in, cash out. So what we wanted to do was to make sure that we go beyond. We make products available beyond the cash in, cash out. Of course, there is cash transfers, transfers, and there's also bills payment at the agent location. But it was important for us to have other things as well, other products that are available in the bank branches at the agent locations. We haven't pretty much, when I say we, I'm talking of the ecosystem. We haven't done much in that regard. We don't really have a lot of microcredits. We know that fintechs as well as banks are focusing on credit. So we've moved the needle in terms of that. But in terms of micro pensions, micro insurance, we haven't really done much, in that regard. But also social payments, we've made a bit of success in terms of social payments, because they're pretty much a lot of super agents and MMOs do make social payments on behalf of the government, but we can do a lot more than we're doing today. So when I look at all the payments in terms of account opening as well, we're not there yet, but we have really moved. To this year, so far, we've opened about 5.8 million accounts. The target is 10 million accounts / wallets at the agent locations. And, with hard work of the banks, the super agents, the MMOs, so far that we know under SANEF, they've opened about 5.8 million. So which is, a far cry from what we were doing in 2018 or 2019 when we took over. In terms of transactions as well, about 1.6 billion transactions were done in 2021. This year so far, we've done about 846 million transactions. Last year, the value was about 30 trillion. So the value so far today is about 18.1 trillion. So in terms of course, we know that to do all of this, we needed technology, simple technology to carry this along. So we introduced the SANEF platform, which enabled some products to be available at the agent locations, most importantly, account opening. Also, the ability to be able to add all these other products on, even the micro pension, micro insurance, and all that. With that technology, we should be able to add them on at the agent locations as well. In terms of branding and awareness, we've done a bit about that in the sense that all the SANEF agent locations are branded, and they also have certificates issued as well. Because previously, you just had everyone and just doing their own thing. So now we had to bring everyone together. And then through the super agents, the banks and the MMOs, we have branding in most of the locations as well. In terms of trainings, we work trainings and creating awareness. We work with our partners again to go to all the 6 geopolitical zones. Before the pandemic, we were physically going to all these places to meet with agents, to discuss with them, to discuss their needs, to also educate them on exactly what SANEF is about, what we're trying to achieve. And we also visited the community. We had the law enforcement agents, attending, like the policemen and stuff like that. All this we do together with the partners as well. In terms of e-learning, we joined e-learning platform. So with CBN and GIZ, we created an e-learning platform, which is yet to be launched. But we've already started the pilot phase. So we hopefully that should be launched soon. I must emphasize, that the reason for the success, minor success that we have so far is collaboration and collaboration and collaboration. I can't overemphasize that. Before now, everyone was doing their own thing. So we have a situation where banks are sitting with fintechs, international organizations are working together with us. CBN are working with us. Federal and state governments are working with the super agents, and so we work directly with CBN in particular. We go around across 6 geopolitical zones creating awareness. We work with the Ministry of Humanitarian Affairs to empower the youth. We're with them on this youth empowerment program. We also work with CBN in particular over advocating a viable environment for the agents, especially for their sustainability. So even when we talk about all this, making sure products are at the agent locations, all these things we do, we have at the back of the mind financial inclusion. We have at the back of the mind people to be able to reach out and get to their access points and conduct their transactions, open accounts, join the, join the financial system. we have that. We also have at the back of the mind that it's not enough to have 1.3 million agents and then they fall by the wayside. It was important for them. It's important for them to be sustainable. So that's why it's also important to have enough products for them to sell and earn income from as well. It's important for us to let the state governments know that they can empower their youth in their various states through agency banking as well. So to round up this, what you've just said, I would say three important things, really helped us in this. One is CBN's commitment, to deepen financial inclusion through the various policies. I mean, they gave subvention funds to the super agents and the MMOs at a single-digit rate. They are there to collaborate at all times, to educate, to create awareness, to even open account. They have something called Account Opening Week, which they do, on a quarterly basis. Like I already said, collaboration in the ecosystem cannot be overemphasized. The creation of SANEF, I think, has taken us a long way. Forget what we've done, but the idea of the banks, I used to be a banker, the idea of banks coming together to do something together, I think, it's something we shouldn't ignore. And not only are they working together, they're also working with super agents, mobile money operators. They're working with other people as well. They don't really see them as competition. They see them as collaborators, people that, in order to move financial inclusion forward. And I think if anything good has ever come out of COVID, I think it is agency banking. Because at the point of the lockdown, that was when everyone realized that the importance of agency banking. That was when transactions went through the roof. That was when banks also realized the importance of serving their customers through agency banking. So you have a lot of them also going into agency banking, also supporting the MMOs and the super agents today. So pretty much, I think we have a long way to go, but in terms of agency banking, we've moved to the needle.
Thank you so much, Ronke. And I think the ratios are there to show. And what you're saying is to keep the agents sustainable, other than them having other lines of business, we also need to boost them up with different financial activity to ensure that they can remain within that ecosystem and scope. And I think also the fact that from a behavioral perspective again, so if you notice there's certain trends across each of these ecosystems, CBN's behavior in terms of being more forward-facing, customer-facing, partnering with different people, even the banks as well, being more competition, working in that competition space that we can work together as well as compete together as well. And all these things take time to evolve and sort of be institutionalized in the new DNA of the businesses that we're forming and we need to form today to address this big elephant. So we'll come to Mr. Bickersteth now, for example. So Shola, you've been working alongside in the agency space as well, talking about your financial inclusion centers, and you have this concept which you call a professional agent. So staying on this theme, as FIC, you use the term professional agents. Can you elaborate on the competency barriers that you're trying to address in this space? Thank you.
Yes, good morning, everyone. Thank you for the invitation. I think Madam Wilson, when she was speaking, spoke a lot about properly trained agents. And that's one area I'd love to just hold on. And thank you, Ronke, for the good job you've done. It's been wonderful. And also to note that there's a plan by SANEF to introduce an e-learning platform. But we believe that for us to deepen access to other types of financial services, insurance, pension, and if you open it up a little bit, mortgage and so many other things that we're presently not speaking about, we need professionals. So it does not require immediately that we need people that have BSc in financial inclusion. We held the first exam in agency banking with CIBM, I think in April of this year. And we're working with them to create a certificate course in agent banking. It is a basic entry level, but it's a little different from just training because it now leads to a path to professionalism. And of course, we can now expand that to certificates in insurance, in pension, in credit, and it can go on and on, e-commerce, markets, and so on. So we are advocating that we need to specifically create, out of the existing 1.3 million agents, a category of specialists who have a certificate, basic certificate, but not just training. Beyond training, they are certificated by the insurance body, by the pension body, professionals, so that they can start creating a career out of this whole industry that is emerging. We have pharmacists, is a profession. Banking is a profession. We're hoping that sometime soon we will be calling you Professor of Financial Inclusion, and it will be, a professional certification sometime soon. So I'm hoping that sometime soon, 1 or 2 universities will introduce agency banking, BA in agency banking, or even BA in financial inclusion. We believe that that is what will deepen all the achievements that we have made so far in making financial services accessible to the unbanked. Let us also speak a little bit about channels. One of the channels that the financial inclusion document has recognized is what is called the digital money. They call them mini branches. But we propose that that should also be expanded a little bit. We presently call them financial inclusion centers, because those centers need to be rural, they need to be semi-urban, but they need to be on the ground, not the present pattern where agents come to a location and then they leave. If we need to subsidize them for a year or 2, that is the infrastructure that we need. The same way where we have post offices in every nook and cranny, we have retail shops in every nook and cranny. We need to have financial inclusion centers in every village in Nigeria. We need to have certified individuals who can build a profession out of being financial inclusion specialists. If we carefully get about 80,000 of them into that space in the next 1 year, the following years are just going to be great. I would like to talk a little bit about the cashless payment has been wonderful. And singularly is the reason why there are so many fintechs in Nigeria today. We should take time to improve on what has worked. So we need BVN for the insurance industry, BVN for the telco industry. Take telco, for example. There is no single means of confirming all the phone numbers that an individual has. And unfortunately for us, most of us has 5, 6, 7 numbers. The telcos have their individual data, but there is no structured scheme to bring them together and share that data and make it accessible in a responsible manner, just the way BVN was done. KYC, okay. We need global KYC. We need to expand tiered KYC to global KYC. If a bank or even an insurance company or whoever conducts KYC on an individual, why do other institutions need to go back and do KYC on that same individual? So we need to also expand that and have a global KYC structure that will help us to deepen access to finance. So those are my thoughts around the professionalism for the industry. Thank you.
Great, thank you very much, Shola. And I think that this issue about data sharing and information sharing, so the cost of compliance doesn't become an onerous burden, is really important for all of us to bear in mind. And this issue about, how do we improve both the hard, the physical, the brick and the mortar, without really taking it away, knowing that it's the first point of interaction for some of the rural dwellers. But again, we have to be mindful that you and I are not the target of this conversation with your 6 telephones. We're looking at the people who might be sharing a SIM or sharing a telephone. So let's focus on the key people we want to address in this space. So Isaiah, you've been, you're welcome to this conversation and this community, although you're not welcome, you're not new to the development space, but within the EFINA ecosystem that you have now taken the realm over, what can, we know that what cannot be measured cannot be improved. And I think EFINA has been very instrumental in guiding and sort of being that navigating force around what's going on within the sector, what are the drivers, what are the key barriers and inhibitors, who are the stakeholders, and what are the inclusion catalysts in general. So in your view, what are the top 3 priority bottlenecks that need urgent resolution if the 2024 or 2030 agenda will be realized, and how are these impeding financial inclusion efforts? Thank you, Isaiah.
Thank you very much, Professor Yinka. It's important to note, first of all, that for all of the financial inclusion indicators, from payment, savings, credit, insurance, pension, Nigeria didn't meet any of the target by 2020. However, we had considerable progress. Now, what I always say, especially to a lot of people, when we look at the percentages and numbers in terms of financial inclusion, and we see that for payment, for example, we're lagging behind by 25%, for credit, we're lagging behind by 37%. What this translates to is the fact that a lot of people have limited opportunities in terms of being productive or in terms of being able to live to their full potential. That's what this percentage and numbers mean. And that's why it's important for us to find ways to overcome these barriers, and to also find a way we need to be able to leverage data, which is what EFINA has been doing since 2008, providing the necessary data to inform key decisions and policy actions across different sector. But when we look at this, we also look at it in the context of the Sustainable Development Goal. We see that the bottom line principle of the Sustainable Development, there is no Nigeria that is financially excluded. Most importantly, the poorest women, and Northern Nigeria, where we have the highest form of financial exclusion. And if we want to think or consider what areas we need to focus on in terms of how what we must do to accelerate the impact of financial inclusion intervention, definitely we need to think about this constituency. Women, the Northern Nigeria, and definitely also young people. These people represent the group that is most financially excluded in our society. We also need to consider how we can accelerate the impact of digital financial inclusion. Now, for the numbers, when we consider the numbers in terms of financial inclusion in Nigeria, when we see it's at 64%, we realize that this is including both formal and informal financial inclusion. However, from research and data, there are evidence to show that when people are formally financially included, it increases their chances to live to their full potential compared to those who are just financially included, but not within the formal financial inclusion space. Now, when we think about this and also consider the fact that the digital, the opportunity that comes with digital is enormous in terms of how it can ensure that people are productive. And even if you consider this in terms of development language, you know, in the development sector, what is the most significant or relevant is the amount of life transformed. And when we think about financial inclusion, we think about the number of lives that have access to financial services. But beyond having access, we definitely want to go beyond making sure that people are even able to open their bank account. But after opening bank account, how does it transform to life and economic opportunities for these people? And how are we tracking these numbers? For those who have bank accounts but not operating them, they are still counted as part of those that are financially included. But how do we track figures and numbers to make sure that this is actually translating to economic productivity for those at the bottom of the pyramid? So we have to also consider the pathway to making sure that data and impact are actively connected. That's another key point apart from the first one, which is definitely making sure that we break the barriers to women, Northern Nigeria, young people. But what's also very important is that if we consider some of the key barriers, for example, to financial inclusion in Nigeria, we see that attitude and perception, access to banks, irregular income, institutional exclusion, unemployment, cost of banking, low interest on deposits. But we see that, for example, access to bank takes 31% in terms of, if we're thinking about percentage, but institutional exclusion also take up to 22%. And how do we, for example, address all of this? Institutional exclusion refers to operational or regulatory factors, such as identity or documentation requirement. And we also want to talk about exclusion based on level of literacy. For a lot of people, for example, especially people at the bottom of the pyramid, they do not, for example, know how to read or write. But how do we measure that when we think about the ability to read or write? It's the ability to read or write in English that is being measured in terms of data. However, when we did like a deep dive in terms of our data collection, we discovered that for some of the states in the north, where we claim that there's very low level of literacy in terms of the ability to read or write in English, for some of the states, the people living there actually have the ability to read or write in Hausa up to 60-something% or over. What that means is that if financial services or product, USSD code and other elements of financial services, microfinance, pension, micro insurance, come in the language that these people prefer, it might also help to deepen financial inclusion. So we need to think about institutional barriers. And also, one of the things that we may also want to consider is instrumental and intrinsic factors that affect the ability of people to be financially included. And we need to think about this as we even consider Nigeria in the context of other countries. We see that Nigeria as a country has a very huge mobile phone penetration, but this does not necessarily translate to penetration of digital financial services like countries in East Africa, Kenya, and the likes. And this is also similar to maybe countries like India, where mobile penetration necessarily does not translate to the same level of financial inclusion. However, they have high level of financial inclusion because they understand what the motivating factors are for different countries. For example, in countries like Kenya, for people who use mobile phone, one of the motivating factors might be the fact that they can transact and do business. But in countries like India and Nigeria, it's more cultural and social factors that drive the use of mobile phones. But that does not limit the ability of financial inclusion interventions to be able to reach its full potential. It just means that we need to integrate financial inclusion programs to align with the motivational factors. For example, in Nigeria today, we have over 180 million registered SIM, though that does not naturally also translate to unique identities in terms of SIM registration. But there are big opportunities to explore how to leverage the connection of data, policy, and impact, and how to make sure that we are effectively tracking that to accelerate the impact of financial inclusion. Thank you very much.
Thank you so much, Isaiah. And again, you're hitting on the fact that behavioral changes are necessary when you tell us that, oh, people are using the phones for economic and we're using it for social and cultural. So how do we change our mindset? But I think also, if you think about mobile technology and what mobile has done, it's also provided access to work and certainty of work for people like artisans and plumbers, right? They can get a mobile phone, get a call, come and do this job, etc. So what I'm hearing is, how do we embed financial services across those? So there's that economic benefit and that economic activity driving that as well. But I think most importantly, you've touched on this issue about how do we contextualize it for Nigerians. We're trying to solve a problem for Nigerians in Nigeria. So the FSPs, how do we build in more product or service innovation to ensure that we can have services in Pidgin, in Yoruba, in Hausa. And I know that when I was doing my doctoral studies looking at e-banking, that was one of the biggest challenges as well, that only till recently did the ATM start asking you, what language do you want me to speak to you in? So we need to build we need to build around the consumers, not expecting the consumers to automatically have this overnight behavioral change to get into the financial inclusion space. So we have only about 10 more minutes, and I'm going to go to Dr. Paul now, because I think that Dr. Paul, it's nice for you to share with us some of these issues that we are talking about. And I think someone brought it up regarding the issues around trust and consumer protection and safety of transactions and safety of people. So as we see, that I know that consumer protection is in every financial services regulators remit in general. Everybody has that remit. But within the payment space and what we're talking about today, CBN, it's within CBN's purview to seek a level playing field between FSPs and their consumers. By default, the field is tipped towards the consumers because we've all been in this position of dispense error or something or the other. But then again, if it, the example I always use is, if I try to withdraw 10,000 from the ATM, and it didn't work, I have multiples of 10,000 that I can try the transaction over again with. But if it's somebody else, that is his last 10,000, and he withdraws it, and they tell him, oh, wait 24 hours or wait 48 hours before you send an email, that might be the money he needs to use to send his child to the hospital. How do we address those issues to ensure that complaints management, redress, and all these things happen swiftly and promptly to build trust in that community and segment that we're trying to attract and retain into the sector? So how is CBN promoting consumer protection, especially with DFS? And again, yes, Ronke did say that COVID was good for agency banking, but COVID was also good for new set of scams and new sets of crimes, etc. So how are we addressing those things, Dr. Paul?
Thank you, Prof. I'll start with the reversal of debited monies from your account, assuming that the transaction was not effected. For the low-income person who is just maybe transferring 1,000 or 2,000 or whatever amount, and the transaction did not conclude or consummate, and then they require their money urgently. Actually, there's a whole lot. CBN is working from the policy perspective and also supervision perspective. There's a whole lot that depends on the switching companies and the payment gateways and all of this infrastructure happening. But we have a mechanism in place to ensure that, personally, I've experienced a lot of this happening to me. And then within 1 hour or two, immediately I was wrongly debited. My money has always been returned to me. It doesn't even get up to 1 hour. So it used to be in the previous times when ATMs and POSs and a lot of the payment gateways were analog, that we were seeing 24 hours, 48 hours. Those times have been drastically reduced. Those timings have been drastically reduced, and I can tell you that I've experienced it quite a lot recently. And within an hour or within even a few minutes, I'll get my money back credited back into my account. But where we have extreme cases where maybe some payment gateways or POSs are still riding on the analog gateway, which is not necessarily the fault of CBN, because those providers should plug into the digital, to the current, should update to the current infrastructure, where reversals happen automatically within a few minutes and at the most an hour. So, but we have a consumer protection mechanism within the Central Bank of Nigeria, which ensures that if a consumer, is wrongly debited or there's a complaint, you have redress, you have a window of redress. But first of all, you must complain to the agent or to the bank or any service point where you were served. And that's the very first point of call. And they will try to resolve it within a very reasonable time. And if it was not resolvable and you have done everything you can, then you can escalate to CBN, to the Consumer Protection Department. But we always encourage that this should be a last resort, because we have a mandate to the banks and to the service providers that they must, and we do implement sanctions on companies and providers who do not conform to these, mandated timeframes for consumer resolution. And so that's basically it. And then we also have made the payment system very safe from fraud. If you see fraud happening today, it must have happened from the point of the user giving authorization unbeknownst or maybe inadvertently giving authorization to certain things. So we need a lot of consumer literacy, consumer education around fraud, around protection of personal credentials and identity, because a lot of these, happen from the user end, because they are not aware, they are not educated, they do not protect their privacy and protect their credentials. They give them away unbeknownst, to people who come back and go into their account and clear whatever is there. So that's what we are seeing. The problems and the vulnerabilities are not from the system side. I travel a whole lot, and I could tell you that the Nigerian payment system is one of the most robust. And in fact, we have a whole lot of security mechanisms in place. But our Achilles heel is, a very largely financially non-literate populace who are not sophisticated to protect their personal privacy against fraudsters. Thank you.
Thank you very much, Dr. Ligwe, but I think it's all of us, because at some point in time, what I know is that some of these scammers have become very, very savvy in social engineering. And so we're all vulnerable one way or the other. So it's about how do we all continually enhance our financial education, especially to be aware of some of the things that are going on in general. So we're almost out of time. But before we do that, I want to ask each of my panelists if they had one thing they could put on a wish list, right? So if this was your secret prayer, what is that one thing that we put on our wish list, and we know that towards it will help us in achieving 95% by 2024. So I'll start with you, Mrs. Uwais. That's the one wish list.
I have many, so this is putting me
one. Priority number one.
Education, literacy, the exploitation that goes on is the point that the last speaker made is really on target. The vulnerabilities are at the level of the people that are engaged. It's not the system really. You have people because they're not literate, they share their PIN numbers, they share the details that are meant to be private. They need the support at community level. And this is where there's a lot of exploitation. Yeah. So a lot of education and literacy. Thank you.
Thank you very much. Ronke, your one list.
My major one would be, even though we are collaborating right now, but we need to have a focused collaboration towards making sure that we have more products available at agent locations. I think that's just the most important thing right now, and we all have to do it together. The regulators, the financial institutions, the fintechs, everywhere. We have to do it together to move forward.
Okay, great. Thank you very much. The strategic collaboration and distribution of products at agent locations. Yes, thank you very much. Shola? Shola, what's your one wish list?
Which will be the day we will go and celebrate the first set of financial inclusion specialists in one or two of our universities.
Okay, so we'll have financial inclusion specialists. Thank you. Thank you very much. Isaiah, what's your wish list?
I would say accelerated digital financial services, integrating financial inclusion into other development programs.
Okay, accelerated DFS and integration. Thank you very much. And then Dr. Paul, what is, other than 95% by 2020, what is your own personal wish list at FIDU? And don't forget that whatever you say, you're going to have to implement it, Dr. Paul.
Absolutely, absolutely. As long as it's within my, power to do. Yes, we need a lot of coordination and structure in financial inclusion space in Nigeria. There's a lot of fragmentation, even in the regulatory space, as to what each agency is doing. So we need to synergize to be able to, provide some harmony in the way we propose, push our financial inclusion initiatives. This is really very, very key. Thank you.
Okay, great. So we need better institutional arrangements to ensure that we're all singing out of the same hymn book in general. Thank you all very much. And at this point now, I'm going to go to our audience for questions, and we have some in the chat box. So I'll just start and start with the first one. So I have a question for Dr. Olukwe from Amara Onyeka, and she says, how can we measure the effectiveness of these schemes, and what is the percentage of success of the overall target set?
Okay, should I address this right now? Okay.
Yes, please, if you can.
Okay. When she says measuring the sources of this scheme, I believe she's referring to the financial inclusion programs, especially our targets and how we have made them, right?
Yes, I believe so.
Yes, we are currently, like I mentioned, earlier on, we are currently at 64.1% of financial inclusion in the country. Payments is at 45%. Insurance is at 2%, pensions at 3%, and credit at 3%, pensions at 6%. So we are still underperforming in a whole lot of our metrics. Our measurement is often based on the EFINA access to financial services survey. The chief executive of EFINA is here. There are other metrics that really measure financial inclusion across the world. There is the Global Findex, but EFINA is the one much closer to home. We also have the household surveys which measure financial inclusion, and they use different types of metrics and sampling to try and provide us. But overall, the average now, we are around 64.1% of financial inclusion in the country. Thank you.
Thank you very much, Dr. Paul. And I know that the panelists have already answered a lot of some of the questions in the Q&A panel, so I'm just looking for new ones, if we have any new ones. Now, I have some attendees with their hands up. NESG, do you want to give anyone, is it possible to give them speak time, or can they post their questions? Because I think they've been asking you to post the questions. Esther, Chibuzo, and Olorunjare. If you can post your questions, that would be really helpful so we can save time. Let me just run through again and see if we have any more unanswered questions. Okay, so I have another one, and let me just read it out loud, and I'll see who can answer it. How can online micro-entrepreneurship development community organize their members to carry out the objective of financial inclusion? We train members on different livelihood skills. So I'll let Isaiah answer that, because I think, Isaiah, you spoke to integrating financial inclusion into other development programs, right? So Fumilayo Elebe is asking, I think, or maybe she runs some micro-enterprise development initiative. So how can she embed financial inclusion into her initiative? Thank you.
Thank you very much for the question. I think one of the biggest opportunities to think about how to do that is, first of all, to study the space and see what has been done to make sure that we're not replicating effort. Dr. Olukwe talked a lot about fragmented efforts past, and that does not lead to achieving the goal of any program. It's also important to align whatever effort that is being implemented to national strategic plans, for example, the National Financial Inclusion Strategy, to make sure that it is in line with what the government and key stakeholders believe can achieve the designed financial inclusion program. The other element of this is to make sure that these online groups are also organized and coordination. We cannot underestimate the power of being organized and being coordinated. The CEO of SANEF earlier mentioned about what collaboration has been able to achieve, and what online micro entrepreneurs need to understand is that this is it's not an independent effort that will help us to deliver the goal of financial inclusion in Nigeria. We need to explore the opportunities with interdependence and how to also professionally do that. I know that Mr. Shela has talked a lot about professionalism in doing a lot of things, but it's important to find the key opportunities to plug into what other sectors are doing within the financial inclusion space and somewhat leverage that coordination. So it involves a lot of reaching out, engagement, and alignment to be able to allow online micro entrepreneurship platforms to deliver on the promise of financial inclusion for Nigerians.
Okay, thank you very much, Isaiah. Is there anyone else want to chime in? Because this issue about coordination is not just on the institutional side, but even on the private sector side, that in terms of how do we know what everybody is doing? How do we sort of leverage off each other so we're not starting off the ground blocks again, but we can actually build on and continue to further move the needle further rather than everybody starting from ground zero again. NESG, there is Chibuzo is asking if he will get the Mrs. Uwesi's address through his email address. So I guess NESG would ask get that from Mrs. Uwesi. Tunde is asking about the presentation slides. Tunde, unfortunately, there's no presentation slides here. We just had a nice conversation. So I'm not sure if NESG would share the video recording. I have one from Hajia Sani. And she says, a fantastic conversation this has been. Financial inclusion is undoubtedly as critical to liberal economies as it is to individual empowerment and individual and economic participation. In all of this, what is the status of media enlightenment campaigns by each of the stakeholders here? So this is talking to each and every one of us. So how are we enlightening the media and what are we doing in terms of enlightenment and advocacy campaigns? So I will start with Dr. Olikwe in this one, since he's the chief host of financial inclusion.
Thank you very much, Prof. As you would be aware, Prof, we've always done a lot of sensitizations and awareness campaigns. And we've also done digital account opening drives. We have done so many things with SANEF and also with EFINA and other stakeholders. We just concluded some across a number of states that are most excluded in the country this year. And we started it end of 2021 leading up to this time. And we did it for women. We call it the Women Account Opening Drive. And because we recognize that women are acutely excluded compared to men in terms of access to finance, even in terms of credit. So we went about so many states. We went to Ebonyi State and Ondo State, Kano State, and Gombe, Nasarawa, and a number of other states who are the touch points of exclusion. And we worked with the media on all of this. We've also done account opening drives in 2019. Over the years, we've continued to drive. We utilize even the Federal Radio Corporation of Nigeria, the NTA, and multiple other media houses. We use the newspapers, we use social media, and we're often very active in this sense to try and sensitize, the landscape, the people that we're coming. And we translate all we do in local languages and put them on the radio, and television across all the areas, especially the rural areas, and radios who reach the rural areas. We've done all of this, and it requires a whole lot of coordination, a lot of effort, and also consumes a lot of financial resources to try and do. So these are some of the things we do, and we do them with stakeholders and not, we don't run alone in this. And we coordinate this space, and basically what we do is facilitation, but a lot of this is owned by all the other various agencies who are partners in this. Thank you.
Thank you very much, Dr. Likwe. And will any of the other panelists want to chime in terms of their media campaigns and advocacy efforts?
Okay, can I just?
Yes, please go ahead.
Well, whilst we don't do, we do once in a while, and we're not that rich to do a lot, but we join the banks. The banks have something called Financial Literacy Public Enlightenment. And we actually join them to do that. We have radio programs that we do where super agents, MMOs go there to talk about agency banking, to talk about fraud, and things like that. So banks are actively involved in that, and we're in that with them. It's actually called FLPE, which is Financial Literacy Public Enlightenment.
Okay, great. Thank you very much, Ronke. Anyone else?
If I
Go
may
ahead,
chip in.
Yes.
Yes. And thank you so much for that question. Communication, I found, was very, very expensive. You know, when you're working in these areas, there's a cost to it. And unless you're rich, as Ronke said, it's a huge problem. You know, there were times when we were faced with the dilemma of what is more important. Do we now support these poor people, or do we pay reporters to go to these places? You know, I think the media should also be encouraged to do some CSR in this area. I know it may not be popular, but honestly, the stories need to come out of what is happening in many of these spaces. SANEF has done a great job. I remember meeting with Ronke a few times, and Yinka, you know, all of you are people that we're familiar with. We've been working in these spaces, but yet not much is known, or not enough is known. You know, I commend the NESG for doing this, but really, I think the media should step up and be more patriotic than they are currently. And I hope I won't get shot for this. Thank you.
Well, I think the general call, as you said earlier on, Mrs. Wace, is that we all need to step up in each and every one of our sectors. How do we ensure that we're all contributing? Because it's either, yes, by having these types of fora, we're still not getting to the last mile. So how do we take these conversations to the last mile in general? But I would go to now, Olonridare Thomas is asking a question, or it might be a comment, but I'll just read it. Great forum, but I believe we need to address not only the demand side, more interest must be shown by the supply side. Our regulatory policies must lean more on awareness creation and to enable the public see the interest in the financial inclusion products. The operators must be ready to fund the awareness and consumer education. So that's where the money is coming from. So much has been done so much has been done, but much more needs to be done, considering the opportunities in the Nigerian financial inclusion space. Well, I think that, we all need to sort of do more, because obviously we haven't moved the needle. So it's just that there's still gaps and there's still constraints to be met. So we'll all promise to do more. Esther Salako says, for financial inclusion to expand, there should be assistance to help super agents to grow. Ronke, this is for you. Why is SANEF asking for 2 million, I don't know what that is, to provide APIs for account opening integration? Many super agents can't afford this. So this must be a communication problem. So Ronke, connecting to the SANEF platform, what does it entail?
Initially, yes, it was free, but now it isn't. So for those who, the first 20-something agents, super agents are connected, it was free. So
okay,
there are costs to be met.
Okay, so there are costs to be met. Are they cost recovery costs or economic costs?
Economic costs, costs to be met. We need to pay the people who pay the platform, and we need to pay them.
Okay.
We need to pay them annual maintenance. We need to pay them so many things. So the people who are actually built it, they're also young people. They can't afford not to be paid either.
Okay, so we're in this cycle of we're using young talent, and we're asking people to innovate and use young talent and build products that suit our own needs. But yet again, those costs have to be transferred somewhere else as well. So again, it's not free.
Yeah, the company that built it is run by a young man, and they are only probably 5 years old or something. So they also need to. So it's money.
Okay, so I hope that answers your question, Esther. Well, we'll see in terms of economies of scale, and I'm sure the cost will come down once we start to scale and build more platforms on board. So let's go to Jude. Jude has a question, and I think I'll leave Dr. Paul to answer this. Kindly assist and confirm the role of the eNaira in deepening financial inclusion. So Dr. Paul, this is a very brief answer. I'm sure you can do it easily.
Okay, very, very briefly. The eNaira currently, people can sign on to the eNaira even if you don't have an account, and that's being rolled out. So it really extends financial inclusion, by circumventing a lot of ID problems that people are having, especially with meeting KYC conditions for banks. So you can have an eNaira wallet, and we're working on getting eNaira wallets for people, who do not even have bank accounts. It's a way of opening up the financial services space and making people, on board. There are multiple other complementary, uses that the eNaira could be put to, and this will come in the transactions domain. Shops are using eNaira today to transact. Shops like ShopRite, Amigo, shop like ShopRite and Sahad and many others are beginning to sign on. So there is an e-commerce value proposition for eNaira.
Great, thank you very much. So there is propositions. I think
besides other advantages that the eNaira gives us. Thank you.
Thank you, Dr. Paul. And I think that Oladipo David has, that's not the one I want. I want the one from, just a minute, Olusegun Oguntime saying, and I think, Shegun, this eNaira might solve this. Sometime last month, I had to deal with some artisans in the construction of my home. I wanted to make sure all transactions were cashless, and I was surprised they were like, no, I must pay in cash, with the comment, I don't want bank wahala. So I spent a lot of time to explain the benefits and all. So I commend what has been done so far, but yes, reorientation is needed on the safe side of being financially included, and education on how to use this product, these various means of products. So I think that confirms the fact that we need to do more, but again, it's the behavioral change that we need to do more of as well. So I'm going to go to Tunde Collins, and Tunde Collins is asking, a number of Nigerians are dissatisfied, and some even pull out of formal banking sector due to illegal hidden charges. What is the CBN's permanent solution to this? And does the Apex Bank sanction the erring commercial banks? So Dr. Paul, the question here is permanent solution. Dr. Paul?
Sorry, Doc, your audio was cracking up and I couldn't hear everything you said, but I understand you mean bank charges, right? Disproportionate bank charges, or
yes,
customers bearing the incidence of charges, a whole lot of charges, right? And what we're doing.
Mr. Collins is saying some people leave the formal financial banking sector due to illegal hidden charges. What is the CBN's permanent solution to this? And does the Apex Bank sanction the erring commercial banks?
Yes, we do have sanctions for banks not complying to our guide to bank charges. There is a guide to bank charges, which we have often published, and that guide provides both the ceiling, it basically provides the ceiling above which banks cannot charge. So within those bands, between the ceiling, banks have room to play depending on, so each bank is independent of the order, and they have that room to be able to fix their charges depending on their internal cost realities. So that, having said that, they must not exceed certain ceilings, and CBN puts the consumer first in providing those ceilings. So, but if you have been unfairly charged by your bank and you are sure of that, and that it is not within the ceiling, it's outside the ceilings that we are provided, then you have room for recourse, and then we will sanction banks that go outside those prudential guidelines. But then I sense that the real problem is this. It's not the charges, but the affordability for certain customers. That's what I'm thinking about, because people who are almost outside the financial services framework do not have the income, to be able to maintain a functional bank account because their income is low. They will fall outside the financial services bracket. So what we need to be talking about is to scale up people's income, to scale up their capacity to make money, to do business, to earn, so that they can afford certain financial services. Providers themselves, FSPs, are complaining that the cost of doing business in Nigeria is so high that we are not even allowing them to charge what they should charge in terms of the realities of doing business, because that is really limiting, and that's why they are not serving certain demographics in the country. okay? They are complaining even about the bank charge, the guide to bank charges. So what's the middle ground? Is to scale capacity so that people can have more income and they can afford services rendered by the banks. That's the point I'm trying to.
Thank you, Dr. Paul. But I think I would speak for the consumers here that the power of free is more attractive than whether I can afford it or not. And I think a lot of people would like the lower the better in that sense, because sometimes it seems they're also I appreciate the fact that there is a cost to serve, but when you read some of the financial statements.
Doc, I need to add that.
Go ahead.
That's why we are encouraging banks to go digital. When they say the cost to serve is too high, we're encouraging them to go digital so that they can crash exceedingly the cost of service. And then if you go digital, then you can extend these services almost at no cost, because you design a digital solution, it's hosted in one place, and then millions can access it and use it. And it's, you basically crash the cost. So that's what we're trying to convince the banks to do and the financial services providers to do.
Okay, thank you, Dr. Paul. But I think also, let me speak on behalf of the consumers. We should also encourage them when they're publicizing the incomes they make from e-channels and e-business and stuff. Those numbers are also quite, they're quite large. So it doesn't give consumers the confidence that the banks are trying to crash those costs. But we will work towards this. Dr. Femi Egbeshola is asking, what is the CBN doing about so many fraudulent fintech loan sharks flooding the social media? And what are the indices in place to identify those that are truly licensed and those that are fake? Dr. Paul again, sorry.
Yes, we've been sensitizing people not to patronize these guys. We are also cracking down on anyone, because if you are extending loans, you are rendering a banking service. So we are using security agencies to track them down and prosecute them, basically. But then the onus also lies on the consumer. And if someone rendering service to you is not licensed, it's not licensed by any regulator, and doesn't display. In fact, we ask financial services providers to display their license openly for everyone to see that they are licensed by CBN. It's a requirement, even the microfinance bank, both on your website and anywhere in your service points. So if a consumer is not seeing all of these signs of confidence, then they should refrain from patronizing these guys, because the onus really lies on the consumers. And the Nigerian populace really, knows a lot. But then the fact is that the desire to make quick money, the desire to go somewhere and just, cash out is so overwhelming that people keep continue to patronize these guys. And then when they take the fall, they come back to CBN to ask, what are we doing to be able to clear these guys out?
Okay, so Dr. Paul is saying that we also need to do some consumer due diligence to ensure that we're working with the right licensed providers. Isaiah, I have one for you from Oladipo Olalekon David, and he says issues of finance or credit are dynamic and must be addressed daily or at least quarterly. From EFINA's data frequency, it shows that the data is gathered every 2 years. Can EFINA provide data every quarter or year in order to have a robust time series data frequency, mostly for time-bound research? I'm smiling.
We like to provide data even every second. However, there is a cost to the data collection, availability of data, validation of data. I do know that on a separate line of work that we're doing, we're working with the CBN to create some sort of a dashboard to have like real-time data in terms of what is happening in the financial inclusion space, and to be able to support the key regulators to make decisions based on this. But in terms of the depth of the quality of data that we provide over 2 years, as we grow in terms of technology and how we integrate technology with data collection, we can get to the point where we're able to do this in real time. But we have to think about a lot of challenges and barriers that could affect this. And as an institution that is focused on also providing data that is based on integrity, we do not want to compromise the quality of data that we provide. So we are rather provide it when we have the competence within the timeline that we believe that we are not going to be able to compromise the data. However, also we are working with key institutions to predict, based on what we have collected, what the future could look like for financial inclusion in Nigeria. And we have several publications related to that. For example, what does payment look like in 2030? And what does the opportunity or what does the business case for investment in the bottom of the pyramid look like in 2025 or 2024? So we have some publication related to this. That's to the extent that we can go down, but providing data, collecting data, and validating data is expensive. And we need to make sure that we do not compromise any of the process to make sure we provide correct data to people.
Thank you very much, Isaiah, especially as the fact that EFINA do a very robust household survey of about over 20,000 respondents across the country. So it's a very deep, it's a very diligent work. And I know the work with the Bureau of Statistics also for the enumeration systems and things there. So it's better we have quality than quantity, right? That's the trade-off. So ladies and gentlemen, we don't have any more time for questions. I want to say thank you all very much for listening. And thank you to our esteemed panelists, to Mrs. Miriam Uwais, Dr. Paul Oluikwe, Mrs. Ronke Kuye, and also to Mr. Isaiah Owolabi and Mr. Sholabi Kestes. Thank you very much for sharing your insights, and to our wonderful attendees and attendees, thank you very much for your engagement and your interest. You were very busy in asking your questions, and thanks to the panelists also for providing responses. And I'm sure the NESG will tell us, me through the thematic group, will tell us what's coming next as we continue to prepare for the summit in October. Thank you all very much. My name is Olayinka David West. Thank you for listening. Over to you, Nee. Thank you.
Yeah, thank you so much, Prof. I think it's been a very interesting 2 hours together in this program. Let me join Prof to really appreciate all our panelists. I want to start with our keynote speaker for answering our call. Those of us that know Mrs. Uwais is a very, very busy person, very busy. But when we mentioned this program to her that she needs to come and talk to us, she willingly agreed to be with us. I mean, I know this week has been very, very, it's a very busy week for her. So I really want to appreciate you, Madam, for answering our call and for your very valuable contributions, and indeed for your passion for the topic of discussion. I mean, you worked so much around this area. We can see from the contribution in this conversation, a lot of things that are still going on and a lot of ideas. So as I speak on behalf of about 20 of us in the financial thematic group of the NESG, so I speak on behalf of all of us to really appreciate you. I appreciate Dr. Oluikwe. Thank you so much for answering every time we call. Madam Roque, thank you so much for what you're doing at TANF and all the ideas that have been brought to the table today. Isaiah, thank you so much. With the good work doing at EFINA, you can see the way we all rely on your figures. And I align my thoughts with the person that suggested something more frequent, maybe instead of 2 years, maybe yearly. As we move on, it will really help. It will help us to really move on, to know the issues and to be able to work together to resolve them. So, Sholabi Kestes, I know you've been for decades in this field. Thank you so much for what you're doing right now, for the color you've added to this program. Thank you so much. Yes, I can't really thank, yes, you are one of us, but I want to thank Prof for such a beautiful coordination. We had a session yesterday with all the panelists, and I'm so happy that, the way she has coordinated right from yesterday up to what we have achieved today. Thank you so much. I want to thank the audience for being here. At the peak of the attendance, I saw a list of about 200 of us that are in this program. Very interesting. Thank you so much for answering our call. Thank you so much. And finally, let me thank the financial thematic group members. You agree with me, the purpose of this summit, of this seminar has been fully achieved. We want to, our plan was to have a review of how did we get to where we are now in the financial inclusion agenda? What are the current challenges? What should be our focus in the next couple of years? I mean, we've heard Dr. Olivia talk about year 2024. Some people have talked about Nigeria year 2030 and all that. I'm happy that this session has been recorded. So as a thematic group, we have a lot of work to do now. We'll have to listen to this more and more again to really, I've made my own jottings, a number of issues have come out. And as we should do at the thematic group, we'll sit back, look at the challenges on the table, and we'll work together to engage the government agencies or the private sector entities, whoever is in charge. That's what we do at the thematic group. We look at the issues, invite the agency of government or the private sector practitioners that need to resolve those issues, and together we collaborate to resolve. About 2 months ago, we actually invited the DG of NIMSI. I see a number of issues came up in this conversation on the NIN, and really, he sent 2 of his directors to come and address the thematic group where a whole lot of things were clarified. And that's how we work, the 20 of us. So I want to call on us as patriotic Nigerians to join us. It's a free service that all the members of the thematic group give. We all contribute our quota to the development of this country. And I tell you, Nigeria cannot develop until we empower our people. And empowering means empowering every category of people across all the geopolitical zones. And like somebody rightly said, it's not all about Lagos or Southwest or wherever when we talk about where the banks are all concentrated. But we must lift our entire people of Nigeria along. And I have no doubt that financial inclusion is one very useful, effective empowerment tool. So we'll continue the conversation. Finally, I want to thank the NESG. Mr. Jayola, thank you so much. Please, the team in NESG, please extend our appreciation to him for providing this platform for engagement and for collaboration, as Roke has said. The work continues. The thematic group meets we meet quarterly, and we'll continue our meeting. So please, I'm making a call out. If you are here and you want to join us, please just reach out to NESG. They will connect you with us so that together we can continue this conversation. Thank you so much, everyone, for being part of this. Long live NESG, long live the Federal Republic of Nigeria. Thank you so much, and enjoy the rest of the day.